A very good evening to you and welcome to the programme with me, Riz Latif. So it's been more than 2 months since Britain voted to leave the EU, and tonight London's Mayor will stress the importance of securing a deal which works for the capital and the rest of the country. Addressing business leaders, Sadiq Khan will reiterate calls to protect London's financial sector. Well, one area where the impact of the Brexit vote is already being felt is the property market. Our political editor, Tim Donovan, is at a housing development in East London with more details for us. Tim.
Riz, we all know that the Mayor of London campaigned very strongly for the UK to stay within the European Union, but he says now the decision's been made, we've got to get on with it. At a dinner at Lloyd's Insurance in the City of London tonight, he'll say he will do everything in his power to maintain London's competitive position. He will be as strong a voice as possible and be seeking a strong voice for London in any post-Brexit negotiations. In particular, he says it is crucial that London's financial services retain the benefits of access to the single market. That's the finance sector. What about the housing and property sector? What signals there in the last 10 weeks? Well, there are some signs that the devalued pound are making London's property very interesting indeed again to foreign buyers, as Mark Jordan reports.
Half the properties in prime central London are already bought by foreigners. But this is Colindale, Zone 4, and a development aimed at first-time buyers. But there's a new cash-rich customer on the block.
As of today, we have 80% sold out in the development.
These Hong Kongers eye up new investments. Brexit jitters means the dollar against the pound buys them 15% more here than a year ago. And Colindale is now more profitable than Kensington.
So this is our master bedrooms.
And there are pockets of London that are still heavily undersold, and there's still value to be had.
Another estate agent reports a 1,000% post-Brexit surge in interested foreign buyers.
Brexit is not the end of the world. This country has a stable and secure political system, and it attracts, the foreign investor to come here, like me.
And 15% off. It's like the sales.
Definitely, yeah, it's good, yeah.
The London sale is on to foreigners. It's not on to the English. The English continue to sit on their hands.
I'm going to invest, in buying flats and rent it out.
Not content with a 15% currency gain, foreign investors also avoid new higher stamp duty and second home tax by switching to these cheaper outer zones.
Now they're coming in and buying 3 or 4 smaller apartments in order not to have the stamp duty.
So let me explain. If an investor buys one tiny little flat in Mayfair for £1.5 million, his total tax bill is £138,000. But if instead he buys 6 flats at £250,000 each, somewhere cheaper in London, his total tax is only £60,000. That's a saving of £78,000. He's more than halved his tax bill.
Taxation itself is comparatively simple and much lower than other parts of the world.
So it's nothing inclusive. No.
The public and London's mayor are critical of foreign investors snapping up these homes. But developers warn they're keeping the market afloat amid Brexit uncertainty. If that sinks, so does all the affordable housing tagged on by councils.
Be careful what you wish for, because in the UK and in London in particular, they play a very vital role in underpinning every development.
One of the great hopes of Brexit was that it would make property more affordable. Well, it has, but to foreigners. Mark Jordan, BBC London News.
2 people with me. Let's talk to them now about the state of the property market in the capital. Mark Farmer, who's a property construction consultant doing a review for the government at the moment. And Steve Sanham, who's the MD of Hub. These are your 2 towers behind us. 360 flats, 1 2-bedroom. How many of you? Have you sold them all?
We haven't sold them all. We've sold quite a sizable chunk of them so far. But it's really great to see our first development taking shape here.
Most of it taking shape before this Brexit decision, though. What impact Brexit on this development, if any, or in developments generally?
Well, I think it's interesting. I think the property market, the residential market, took a real sort of sharp intake of breath after the 23rd of June. But I think we always see a slowdown over the summer. The next month, the next couple of months will be really key in terms of how does the market look? How's it shaping up at the moment? And how will completions come through? We're completing this scheme in middle of October. First people will be moving in. Hopefully, lots of people will turn up and complete on the purchase of the apartments.
He doesn't appear to think it's going to be impacted, or buyers, but prospective buyers are going to get cold feet. What's your view of the market?
I'd agree with Steve that there's just uncertainty at the moment. I think there's not enough clear signs to actually illustrate a trend. I don't think there's been enough transactional volumes in terms of people buying, at what level they're buying. There's obviously a potential opportunity around foreign investors and foreign buyers taking advantage of a weak pound. But there just hasn't been enough evidence of that in the summer period. And as Steve said, the summer period usually is quiet for sales. So I think September, October is going to be really important to understand.
Can we see, this point that Mark was making in his film, that we may see foreign buyers looking at developments in places like this, buying several properties rather than the more expensive one because of stamp duty?
Yeah, I'd agree with that. I think foreign investors are going to be looking for value. I think the stamp duty changes that happened in last autumn's statement are really impacting high value transactions. So I think you'll see more of a move to what I would call mid-prime, mid-mainstream residential. So affordable housing, more affordable housing, not the top end of the market that perhaps we've seen the activity in thus far.
But the low pound is not good for the construction business, though, is it? So presumably we might have difficulty actually building homes, though. Isn't there an issue there?
Yeah, so the short-term issue is that the construction materials that have been sourced from Europe overnight are more expensive. So the glass, for instance, on the facade you see behind is going to be a lot more expensive now than when Steve built it, because a lot of that is sourced from the EU. So there's going to be a lot of inflationary pressures on construction, and if the market is not quite strong enough, then the ability for house builders and developers to pass that on to customers may not be there.
So that could be a supply issue. A final point from you, Steve. Do you think there is likely to be, or is there a problem, or likely to be a slowdown in that mid-market, properties like yours?
I think the mid-market, the fundamentals of the mid-market still remain strong. People want to live in London. The London economy is still strong. I think after this sort of hiatus, after the EU vote, the London property market is shown to be much more resilient than it was in 2008. And I think in the mid-market, I think that there is still that fundamental supply-demand dynamic which will keep it going.
Still so many uncertainties as we hear there is, just 10 weeks after this decision. Back to you.
To all of you there, Tim, thanks very much. And you can see more on that this evening in a Brexit Britain special on Inside Out London at 7:30. That's here on BBC One.